everyone. Welcome to Tuesday. And of course, we're going to take a look at the performance for the New Zealand Main Board for the stock exchange, being the NZX 50. Before I jump across and share my screen, just the housekeeping. This is for educational purposes only. Definitely not intended to be personalised advice for anyone. I want to let you know that coming up next Tuesday on the 4th of August, I'm running a free Money Clarity boot camp. It's starting at 7:30 in the evening, run for 1 hour, but it's going to run for 3 consecutive weeks. It's absolutely free. The idea with this boot camp is to give you clarity and confidence around your money. We're going to talk about things like setting up spending plans and knowing exactly where your money's going. We're also going to talk about things like paying down debt and also helping you to pay your home loan off quicker. We're also going to touch a little bit on investing as well. It's a really good boot camp. Like I said, it's free to join. It is all part of Money Month, which you may have heard, which is running for the month of August. So I'm running 3 of these sessions, and each week we will cover a new topic. Love to see you there. I'll include the registration link in the show notes. Right, let's take a look at the New Zealand Stock Exchange. Right, I'm recording this on Monday. It's about 12:30 in the afternoon. So the market's been open around 2.5 hours. We're up about $48 so far for the day, which is really good. Right, let's zoom in. Here is the last candle for last week, and you can see here that it was another positive week. Now, where this little dash line is that's roughly where the market closed, and you can see that it is starting to potentially form a little bit of a line of resistance. So the more times it hits this line of resistance, the more chance there is of it breaking through. And that is something that we want to see happen with our main board. That last candle you can see there is actually for Monday's trading. Let's go and have a look at the 1-year chart. It simply brings these candles up to dailies. Right, so Friday, if I zoom in, we've got that doji looking candle there. The good thing about that candle is the fact that the tail, if you like, at the bottom is quite strong. So that indicates that there is a lot more buyers out there potentially driving this market. So even though it opened lower than where it closed on Thursday, it still shows that there are a lot more buyers out there. Thursday and Wednesday were good, strong days. Tuesday, we can see, was a bit of a down day, and Monday really was quite negligible. I'm okay with that because at the end of the day, with markets, they never ever work in a straight trajectory line. I like describing it, it's like us taking a breath. We have to take a breath in order to accelerate up again. And markets are exactly the same in my view. Let's put our moving averages on and just take a look and see what they're telling us. I always like to use the 30 exponential moving average. Nothing particular about this moving average. It's what I use. It's about being consistent. You can use any value of moving averages you like. So the market, you can see, starting to move away from that 30-day moving average, and that is a sign of a good, healthy market. We'll also put on our 15-day moving average. Now, the reason this is days is because I'm looking at the yearly chart, so it brings up all of those candles on a daily basis. And you can look at that. So the market came back sort of last week close to that 15-day moving average, and then it's continued to run again. That is the sign of a good, healthy market, in my view. When you're seeing the share trading above both of those moving averages and those moving averages are trending up, that is really good. That's what we want to see. If I look down the bottom here as well, is when we're starting to see some green candles, I've got a moving average line on that, and that is a 13-day moving average. And you can just see that when the market is having positive days, which are denoted by the green volume candles, it is starting to rise above those 13-day moving average over the volume, which is good. And when it has a bit of a down day, you can see here on Friday that the volume retracts. So that is a again, a good sign of a good, healthy market. Let's have a look at the 5-year chart and just see. And so our moving averages crossed around the middle of June this year. And again, the market's still continuing to run. That, like I keep saying, is really good. It's a good, healthy sign. We could see these weekly candles pull back to the moving averages. And again, that is fine. That's healthy. But when we're seeing the candles on both the daily and the weekly chart, which I'm on now because I'm on the 5-year chart, if they are trading above those moving averages, the moving averages are rising, the 15-day is higher than the 30, those are all good, healthy signs of a good, positive market. So that's, like I said, something that we want to see. Markets opened on Monday, been open, like I said, about 2.5 hours, and already we are positive for the week. So that's something that we do want to see. Now, I'll just stop sharing, come back on Thursday. We are going to take a look at channel infrastructure. They have been a very good share, and I'd like to show you why. So do come back then. But also remember, check out the link for the Money Clarity Bootcamp. You're going to get lots of really good takeaways in this 3-day or 3-part session series that I'm running, and I would really love to see you there. And like normal, if you've got any questions or if there's anything you'd like to know, any shares you would like me to take a look at, please let me know in the comments. I'm happy to help. Take care.